Okay, should be live. Yo, yo. Gonna get an audio check really quickly. Can you hear me? Okay, cool. Okay, bias, as mentioned in the weekly outlook, was to invert this gap and, reclaim this gap, which we were on the verge of doing. I'm going to use this gap as a reference point for immediate rebalance. If we touch this, I'll be bullish. And I want to see us trade above this wick into this SIBI. Looking for these relatively equal highs. We've made our tap on the new week opening gap, which was also the bullish order block high here. Real nice. So looking for higher prices. And well, this is a market maker model. If you zoom out, very nice market maker model with a low risk buy setup from the new week opening gap. And now I want to see it run into the relatively equal highs from the open. So let's look at our pre-market levels. 7 o'clock makes the pre-market low. And then our pre-market highs are all the way up here. London high, and then we're going to use the quadrants from that daily wick. This 5th of November premium wick. I'm using those levels to judge where PD arrays are going to be more respected. So here, when we've got all these breakaway gaps and it's overlaying the quadrant, we make that one last little tap on it with a wick. You know, that's a sign that you're going to use this to elevate and be as a support level, like this gap. Okay, so yesterday's price action was just terrible. If you traded this, yeah, you shouldn't have traded that because it's bank holiday. So, horrid price action. You never want to trade on days like that. And today, obviously, you can see the difference between our sessions. Asia that day, Asia today. London that day was actually a little bit nicer than London today. Asia's range in terms of handles, 85 handles, that's not too bad, that's a bit average, and then London was a bit tighter, even tighter than Asia, 60 handles. So that means generally your pre-market session and the open is going to be where you want to do the rest of the work, because that consolidation and seeing it be a tight London range is generally going to lead to a more explosive pre-market. That blue line is our regular trading hours close. We'll just keep that in mind because, we've still got 10 minutes to move around for our opening range gap. Because I'm bullish, I would rather us wick lower into the opening range gap around the consequent encroachment level and then use that consequent encroachment or the upper quadrant to just pop higher. That'd be ideal. Good morning, Otaku. Morning. Well, It's afternoon for me, but I don't know if it's morning for you. It's morning for the Americans. This is low resistance, because above this high we have a high, and a higher high, and a higher high. And the Canadians, yeah. You just woke up at 5 p.m. That's not good. Yeah. This itself is a little mini market maker model. This on the 5-minute. Can use this as the high. But then distribution was only really one phase. Small mini reversal. Takes out the short-term low. Pull a shoulder block. Fair value gap here. Let's check ES. Same thing. Low risk buy sub, accumulation, and then second stage of accumulation. Hopefully. Isn't it going to take the pre-market low first? Maybe. I don't know. I'm not even trying to predict it. We're going to wait for the opening range gap information first, and then I'll use the quadrant levels on that to decide. Hi streamer. Hello Sui. Hello. Yeah, we're just going to be waiting for the next 6.5 minutes. These lows here are relatively equal, plus it's inside this gap, so that might be a good little first objective. Maybe. And then if we can get an opening range gap level aligned with this, and we can find support around this PD array, the fair value gap, that would be really good. But this is also a breaker. So if we can get back down into this, this will be really strong. I don't know what it is, but I feel very dehydrated today. Don't know why. What's up, Ivan? This is the dealing range I'm looking at on ES. And the liquidity void very closely aligned with the equilibrium. And then if you're looking at it from the entire thing, here you go. I'm using this as an unrealized dealing range because we've traded from this high to this low, but I'm now using it from this low to this high. So it's a realized range because it's happened, but I'm using it in terms of this is my starting point from the impulse price swing, and then this is where I'm expecting it to go. With that in mind, we've dropped down the discount, bodies respect the NOG, drops down the discount, bodies respect the NOG, without taking this low. So that intermediate term low, if we go into the 15-minute chart, I believe it's an intermediate term low. Intermediate term low, and this is a higher low next to it. So we'll call that short-term low. That's what you want to see if you're bullish, and you don't want to see these taken out. So I don't want to see it run all the way into these lows on the 15-minute chart. Should just be a nice run higher now. If it broke, then it has. If it broke these, it has no reason to go back up. The gap? I don't know what you're talking about. Try electrolytes. I do have electrolytes right here from Revival, and I am putting them in the water, but they're not really helping. You yap a lot? Wow. Is there a no rant version of this stream? I don't yap that much. Not that much. I do have to, talk because I can't just sit on stream silently. So, unless you want me to. ICT said a low is an intermediate term low when it forms a gap. Wicks are gaps. Can we not also say a low is an intermediate term low when it forms in a wick? That's a good question. That's a very good question. I don't know the answer to that. An intermediate term low can be the low that forms in a gap, so this would be an intermediate term low, but it doesn't have to be. An intermediate term low can also be, well, there's two types. A low with a short-term low to the left and right of it, not a swing low like this. It has to be, this would be the intermediate term low, and then the swing to the left of it is lower, and the swing to the right of it is lower. That will make this an intermediate term low. And then the other type is when you rebalance the fair value gap. So this would be an intermediate term low. That one. Regarding wicks being gaps and then price dropping into a wick, I don't know about that. I actually have no idea. It's never said anything about it. I don't think so. To be honest, market structure and the way ICT teaches it, with intermediate term lows and long term lows and short term lows, it's already subjective enough, so I don't need any more additions to that. I'm good. Because you can say this is an intermediate term low, and this is an intermediate term low, and then this is a long term low. Like that. And then, yeah, theoretically, a long-term low should not be broken if it's going to be bullish, but this is absolutely allowed to do that. And then someone else may see this as the long-term low. I don't know, market structure is very subjective. It's more about experience, I think. Okay, market open. Let's measure our gap. Premium gap up like that. use quadrants, and I'm gonna make them purple. Okay, it'll probably take out this pre-market low because, well, it's just running in towards the consequent encroachment of the gap. Take this stuff off. Hello, Sean. Sell stop below the first fair value gap of the pre-market. I don't know about that. Maybe. Okay, pre-market low. And now I'd like to see a purge and revert into the opposite end of the pre-market range. Remember, if we take out the pre-market low with the 929, the 930, or the 931 candle, then you have a good chance of seeing a purge and revert into the opposite end of the pre-market range. So here we just run lower. We've filled in that consequent encroachment on the 931 candle. Now you want to see the signs of a liquidity sweep. So you don't want to see this be a run. It needs to sweep this low. If it's a run, it doesn't. That rule or that general premise doesn't apply. So as long as this becomes a liquidity sweep, you're very likely to see it trade into the opposite end of the pre-market range. At least. My sell stop is cancelled, way too big of a stop loss. Cool. Cool. Okay, that's just me marking relevant pools of liquidity. So this is internal range liquidity from the Asian session. This is a bullish order block from the 5-minute chart on the Asian session, and this is this is the Asian low. This is actually Elric's bull point. Never fear, Brown entities here. It's good to see you, Clinton. Long time. This is our first presentation. Fair value gap 931. I want to see that become an inversion for longs. Can it go for another sell-off from 0.75? What do you mean? Longs might be valid at the break of the recent fair value gap, but stop loss too big for me too. Yeah, I would agree with that. 25,650. Oh, that's your target. Or are you just saying random numbers? 25,650. Sure. I'm not against it. Okay, we got the Asian low. And got the 15-minute chart. No, I'm not. 5-minute chart. It's not clean, but it is technically there. We'll see if one of these PD arrays can support price higher or if that's going to fail, and we just keep going lower. I wouldn't really use this as a market structure shift because that could be taken and then still used as a turtle soup to go lower. I would want this to become an inversion gap. Bouncing off the 11th of the 6th, not the 6th of the 11th. ORB higher now. ORB, what's ORB? We're also at 50% of the 4-hour order block. Yeah, I gave this to the round table in the morning. I just mean this one. I was looking at this one in the morning. This one. I'm going to take this off, by the way. I just want to see where we are. Oh, body's closing right at the mean threshold of it. We'll see if that's the necessary support to go higher. It did give us a full gap closure, so you want to see it find support of the 25% of this becoming an inversion gap, of the new week opening gap, and of this 0.5, which is a consequent encroachment of the opening range gap. If it doesn't, I don't have any conviction to long. I want to give away for $100,000 account, nice. Strong gas S&T. Opening range. Oh, November the 6th. Okay. We use a different date format in the UK, so I thought you said the 11th of June. When I get the Lambo, you can ride shotgun Valrex sitting in the back. Valrex driving. Oh. SMT. Damn. That's some decoupling if I've ever seen it. All-time highs on YM. Nasdaq weak, ES on its way. Yeah, if you're looking at 6 turn, you're thinking, oh, this is going to catch up. You want to hold off on that because it's decoupled. So this isn't where you play catch up in between assets. This is just straight decoupling. So you want to wait for that. If you're going to do the catch up thing, like where you wait for it to catch up, or you want to buy Nasdaq because you're estimating it's going to catch up to the YM, you want to hold off because they're decoupled, so they have no reason to correlate anymore, just for now. Awesome, I really appreciate your edge. My challenge is reversion mindset, so having you thinking out loud is amazing. Thank you. No problem. No problem. Yeah, everyone likes these streams. That's why I do them. Okay, I'm gonna take this off. Why is this wonky? Damn. I was looking at it wrong the entire time. Okay, if we're fading these relatively equal lows, which are inside a gap, and we just ignore those, then that's strength. hourly fair value gap doing its job. Well, fair value gap. Let's think. If I was using a PDO in the hourly, it would be this candle as an order block, or these two candles as an order block. I wouldn't really use that gap. This is more of a balanced price range than a gap, and obviously we've run through that, so. Although I'm not using it, I'm just showing you. Okay, we've inverted that, and we're probably trading lower. These relatively equal lows, the PM internal low, and then the PM extreme low. Shorted on the breakout candle of the pre-market low. Nice. I know why you did that, Suvi. Suvi knows how to trade continuations now. I have the order block and the fair value gap marked, but yeah, good. Of course I know. Displaces through the low. Want to chill just because it's low probability from the decoupling. You thought it to me. Okay, that PM, or was it PM low? No, the relative equal lows. Okay, that's not being faded then. Yeah, that's why you don't want to play catch up on the asset that's not taken, or that's decoupled. Sell off till 11th November's 11 o'clock low. I doubt that. Well, maybe. I don't want to see that though, because I'm bullish, and this should be good. Like, if we take out these lows and we don't reverse from here, then longs are kind of invalid. If you look at this from optimal trade entry, it's 62% retracement and 70% retracement at these lows. So I don't mind it taking this out because that's the consolidation. If you want to sweep the consolidation lows and then trade higher, I wouldn't be opposed to it because it's also at optimal trade entry. But taking out the 11th November 11 o'clock low, I would not want to see that. Thursday, 6th November 2025, first fair value gap 930, just below. Honestly, I know I taught it, but I don't usually use first presentation fair value gaps from over a week ago, to be honest. Like, I'll use first presented of the month, and then I'll leave that on. So if I go into object tree, November the 1st, regular trading hours, presented busy. And I should have the Sibi as well. Unless I deleted it. Probably delete it. And then that's this. That's what I use. And sometimes I'll use the previous day first presentation fair value gap, or if I'm trading PM, I'll use the AM first presented fair value gap. But I don't go really that far away. Because I already used new day opening gaps from like a month ago, so if I'm going to use first presentation fair value gaps from a month ago as well, I'm just going to be too all over the place. I'll put the gradient levels back on. That low's aligned very closely with the consequent encroachment of the 27th October's new week opening gap. So if we can break this and then see a pattern revert, that'll be good. Also, what I said earlier about the pre-market low being taken at 929, 930 or 931, meaning that you generally revert into the opposite end of the range, that's for a liquidity sweep, but this obviously displays through and it kept trading lower, so there's no liquidity sweep here, meaning you don't have that rule apply. Buy stops above 940. Okay, nice. This is where I want to see it turn. We've got the bullish order block. And I've got the busies. I'm not going to mark that out. We can eyeball it. Take that off. Good morning, Velric. Do you think we could fill the opening range gap from Friday to Monday? Possibly. Marking 5-minute PDRA, yeah. You want to always go through the 5-minute and the 15-minute chart, generally. Let me take a look at the opening range gap that you're talking about. Friday to Monday. Oh no. Well, I'm not saying we won't, but I want to see that. I do not want to see that. I want to see us find support and just trade through it. Because I'm bullish, so I can't take sell trades. I'm only looking for buy trades. And if I want to take buy trades, it's got to be done off setups like this. Can't close my paper trade, but full TP taken and yield PM low that got taken. Nice. Looks like a minor market make a buy model. Do we think that order block is invalid since it was below high time frame consolidation and it's broken now? Do I think this? No, not really. It's fine. Because it's an impulse price swing higher, and generally optimal trade entry setups work fine around these, so I'm completely okay with it. Prices in the daily fair value gap, yes. NQ and ES look like they're in sync. Yeah. YM still decoupled. Although I want to see these start turning around. Ooh. That's the low that I'd look at for the ES. Oh yeah, the daily chart, that's what I was meant to go to. So this is the fair value gap plus new week opening gap. So it's like a fair value gap and a liquidity void, not a volume bounce. ICT said in his video yesterday that this is a volume imbalance. That was kind of confusing to me because he said in the past that a liquidity void with wicks that meet would be classed as a volume imbalance, not when there's still a void there, so I don't know if he was just wrong about that, or if he's changed his mind, I don't know. He does that sometimes. Okay, that's consequent encroachment of that daily candle, that daily discount candle. No, the daily discount wick on the previous day candle. There we go. I'm not going to use these levels. I'm just looking at if it respects consequent encroachment, which it has. So now I want to see this become an inversion gap. I do not trust this as a market structure shift. So in the silver bullet mentorship, when we're talking about market structure shifts, I used to say this all the time, but I think I've stopped saying it recently. I don't trust that as a market structure shift because it can just take it and then keep trading lower because it's not as far of a dig through the gap as you need. This is still basically the low core of the gap. If it runs through the gap and then makes this an inversion PDRA, then I would consider being bullish. But this market structure shift to me is very, very weak. I'll take that off now. Great reaction so far from the 5-minute order block. Yeah. Just tap the order block again and the body gets pulled up. So now this is where you want to see it displace higher and through this gap. And if it doesn't do that, then long setups again are just not going to happen. But we've got the macro now, so if we're going to turn and start displacing to the upside, this is where that should happen. I listened to Valeric and blew my account. How do I see? If you listened to me, then you wouldn't have traded. And you'd be fine. So, he didn't listen to me. You can't sue me, there's risk disclaimers. You'll just lose. I want to see that become a bullish order block. If it doesn't, then this is going to be the SIBI that's sending price lower. So, especially with how it reacted to the consequent encroachment of the 27th October new week opening gap. Risk disclaimer, I didn't see it. That's because you weren't here from the start. You only joined late. I'll show you. Look. Limitation of liability. You are solely responsible for any investment or trading decisions you make. You will not hold Velric, its associates, or affiliates liable for any losses or damages. Bulletproof. Bulletproof. Could have been a 1 to 3 profit if not for that huge 55 handle stop loss. So you would have won if you didn't lose. That's what you're trying to say. That's how the world works. Okay, yeah, I think ES is going to go for the low down here. Well, maybe. It's very nice consolidation low, so I can see that. Which would probably lead Nasdaq a little bit lower as well. And why I'm still plowing up. I don't trade in decoupled markets. I just sit out and chill. Okay, bearish order block now. That would be a sell into. I don't really have any objectives for it. Oh, you didn't take it because it had a 55 handle stop. Okay. Well, could've, would've, should've. It doesn't matter. Okay, on the 2-minute chart, this is a very nice bearish order block. Very nice. So I'll probably invert this now. No long setups, which is fine because no entries, but I wanted longs. Okay, we've got liquidity at this low. I wouldn't say the market maker model is invalid if we take these lows, but it would probably take a lot longer to deliver, like Thursday maybe Friday. If another sell-off doesn't happen after this consolidation, then isn't it a reversal? If another sell-off doesn't happen after this consolidation, then isn't it a reversal? Or they could just keep consolidating. So, yeah. I would like this to be a reversal though, don't get me wrong. I want to see this be a market structure shift, and then invert the SIBI. Use the 0.5 of the new week opening gap from the 27th of October as support, and then trade higher at least into the first presentation gap. We'll see. Okay, 5-minute chart wicks a little bit below it, and then the body gets pulled all the way back up, and then nothing closes below the mean threshold, so that's good for strength. because it is overlaying that new weak opening gap low, or sorry, that lower quadrant. So this is the array that you want to see deliver. Like, you don't want to see go lower if you're bullish. I don't want to see go lower because I'm bullish. Okay, I want this to become an inversion gap, and then this market structure shift candle will also be a breaker block, and a fair value gap here. But I'd rather this get left as a breakaway gap, and it just trades higher. I want to enter. Go for it. I don't know why you're telling me. I wouldn't because it's decoupled. And I don't really trade when it's decoupled that much. Well, sometimes I do, but I like to refrain from it. Yeah, you're not gambling. Oh, okay. Okay. Well, I'm glad to hear it. Okay, hopefully that's IO fed. Oops. What's IO fed? There it is. We'll take the CB off, but keep in mind I'm looking for this to become an inversion gap. Okay, I'm having more electrolytes. Let's see if this hydrates me. Give it a shake. These electrolytes actually do taste good. They taste great. It's like squash, but salty. It's what plants crave. What, electrolytes? I'm a plant. Call me a sunflower. Call me a cactus. Reference to the movie Idiocracy. I haven't seen it. I haven't seen any movies really. I don't watch movies that much. Okay, we're in the breaker candle of this market structure shift. So you want to see if that becomes support. Hopefully it does. That's just a regular old gap now. If this gets inverted, by the way, and it trades lower, that just reflects low probability conditions because we're decoupled. When YM's running out like this, and I told this in the Silver Bullet mentorship, which is free on the YouTube channel, free, you're in conditions that it's not that you can't trade, but I would just be on the safe side and wait for something very, very strong. And this is real nice now because it's respecting cold square encroachment. Funny movie. I'm still not gonna watch it. Okay, that's a down close candle 2. Okay, this is strong now. Very nice. As long as it gives us the inversion gap, you can look for potential trades. No advice. If Valric was a movie, it'd be My £600 Life. Look. Look, 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 look. I'm actually trying to gain weight, so you calling me fat is... I've seen you, and you're not exactly an athlete, so let's calm down, please. Clinton. Okay, if that can be propulsion, then... Oh wait, this is propulsion. Okay, I don't even realize. I'm an athletic, right? Mate, I run rings around you lot, traders. I mean, I don't know. The last time I saw you in Discord, you were full buying Nasdaq on a 50k, so running rings around the gamblers, maybe. Maybe. Okay, that's not an inversion gap yet. Yes, consolidation. If you're wondering what I'm referring to when I say inversion gap, I'm referring to this. I want to see it become an inversion fair value gap and then not trade past the midpoint of this. But, well, that's the general rule. You don't want to see price trade through the midpoint of an inversion gap. But in this case, you would have to make room for that to happen because we've got the bullish order block there and there. So it could, if this closes above, and it is an inversion gap, which it isn't at the moment because it hasn't closed above, but if it does, you can't just put your stop loss at the midpoint because Valric said that it shouldn't go past the midpoint. You have to still make room for the order block to be traded back into and then trades higher. So if you're looking at placing a stop loss here, I would have it at this candle's low. Okay, that's an inversion gap now, so that's good. Say you were in there, and you would have your stop loss here. That'll be a good stop. But again, it's low probability because we're in a decoupled market, so you want to chill out. and not be trading. Well, you can do what you want, but I don't like decoupled markets. I like when everything's moving in symmetry, because that's where you get low resistance conditions. Conditions like this may deliver, but it's less likely to do it in a smooth way like that. That would be low resistance. It's more likely to have, like wacky conditions. If anyone wants to buy my full pulling guide, hit me up. How much? Let's get a price tag. I made $7. I'd rather just chill the market stocks. Yeah. Well, I like the sub, but it's decoupled, so I don't like the conditions. No wind and no only $600 basically. That's deep. Let me get a discount. 99% off. We inverted the 5-minute. Oh yeah, it's real nice, real nice. But as the mentor, I have to be a little bit more of a role model and not gung ho, because it's decoupled. Damn, gold is off to the races. Oh shit. Get coached by Brown ICT, only $1,000, and if you order now, I'll include a side post. Another sell-off before reaching the first presentation for value gap. Or wouldn't that be a buy up if we reach the first presented for value gap? Not sell-off. Yeah, that's really not what you want if you're buying. Told you. Low probability conditions. You want to sit out, chill. Chill, chill, chill. Honestly, the PM session has been the better of the two New York sessions recently. Not yesterday. Yesterday was bank holiday. I don't know why anyone in their right mind, unless you're on a demo account, or like the TradingView competition account, I don't know why you would trade yesterday. Terrible. That's not nice. You tell me people were trading that? Can't be trading that. You can't be trading that. Entry into gap before full send. Nah, chill. Be content with your $7. Okay, we displaced above it, but we've displaced below it now, so that's not valid. Well, keep it on. What's the range here? 215. Oh, inversion. Did anybody watch ICT's new video yesterday on the opening range of London? Not yet, not yet. Yeah. Did you find it weird that he said to use the first 30 minutes before London for the opening range? Because he said in some of his Twitter spaces before that you can use the first 30 minutes of any session, and he did that he said that in 2023. Well, then yesterday he said that's only for the New York sessions. So in the New York AM and the New York, well, he didn't specifically say the New York PM, but he said the New York sessions. He said that you use the first 30 minutes, not the first 30 minutes before the session, but the first 30 minutes as the session starts. And then the other sessions you use the first 30 minutes before the session starts. But that contradicts what he said in one of his X spaces in 2023. So, I don't know. I don't really know what to take away from it. So I've been using the first 30 minutes of the London session rather than the first 30 minutes before London session. So what I used to do is I would use the first 30 minutes of trading in London, like this, 2 o'clock to 2:30. But ICT saying you actually have to use 1:30 to 2, which is new. Previously low drawn liquidity. Yeah, I guess so. Yes. Sorry, YM still decoupled. You don't want to be trading, you want to be chilling. To be honest, if it's working for you, it's working, right? Yeah, you're right. But I'm a fanatic. 588 is November the 11th opening range low. 585 is November 6th opening range. What's ORB? Because I know opening range, but like ORB from my knowledge is opening range breakout, which is a strategy. Maybe you mean ORG? I don't know. To me, the area is strong support. Your thoughts? 588 is opening range low. Here's what I'll do. $588 is November the 11th opening range low. Maybe you're on about the micro. On the mini, it's not like that. There's no opening range low at 588. I don't know. I think you got your numbers a little bit mixed up. $15 into New York open. Oh, opening range low, not opening range gap low. Okay. November 11th, yesterday. The opening range is 30 minutes, not 15 minutes. So, maybe you're getting that wrong. But it depends who you learn from, but ICT will teach it as 30 minutes. I know there's retail strategies that use opening range breakouts, and they're using the first 15 minutes. I've never looked at that strategy in depth. I don't think I ever will. But, it's a retail strategy, so it probably doesn't really work very well. At least it's probably got a very, very low win rate, and then when it does work, you're catching massive sell-offs like this. But I can't speak to anything on 15-minute opening range breakouts and highs and lows. I use 30 minutes. If you look at ICT's video yesterday, that would be the video that probably helps you. I think it's titled ICT Opening Range Theory. I appreciate your input. No problem. No problem. Okay, this is a bit of a war between two PD arrays. We've got the 5-minute order block and then the inversion gap, both holding their own. Again, you don't want to be trading these conditions because it's decoupled. Oh, watch ICT opening range video. Good, good, good. It'll definitely be useful to you. Really slow price. Really slow. Really slow. Take that off. With a 5-minute poked into that Sibby. It's not showing a strong reaction that you would want to see. Boring session. Really boring. This is why I've been doing everything in the pre-market range. It's a bit easier to predict right now. Staying in the lower half of this inversion gap. Yawn. Yeah, yawn. What setups did you take pre-market? It's in Discord. It was just along from this volume bounce up to this wick, which looks tiny now, but at the time that was like a massive move. Now obviously we run 200 handles, so it's nothing in comparison, but it was about half the pre-market range from the volume bounce to here. Hi Siri, also want to make the move Enki. Put on my 500 contracts, 1,000 contracts. Okay, we're gonna end it because this is not conditions that I would trade anyways because it's decoupled, and I wouldn't recommend that anyone tries to engage this. Maybe if the 1050 to 1110 macro is something nice, then. But really, all you may see here is either a false breakout and then it runs lower again into that previous day low, these liquidity pools that we've got mocked out, or it just nothing reliable and it makes some fake moves, you get chopped up. You don't want to be in this. The initial breakout was decent because it was just a full gap closure. We trade through the pre-market low with displacement and the first presentation fair value gap. At this point I was bullish, so I wasn't looking for this to be institutional entry drill. I was looking for it to invert and find some kind of liquidity sweep here and see an inversion, but that doesn't really happen. We did get it here, but it failed because, again, low probability market environment from a decoupled market. And if you don't understand this, go onto my YouTube channel and watch the Silver Bullet Mentorship. It's free. You don't need to buy the round table. You can just look at that. That's all you need to be profitable. So, sorry, it's very boring, but I can't really move NASDAQ. I'll have to ask Sam to do that. Thank you for watching, and I will be streaming tomorrow and Friday. Goodbye.